Similar kind of idea, but basically, one of the things that can ruin gamblers is that same mentality where, okay, I'm down, but my luck's going to turn around, so I'm just going to double down, and then I'm going to double down, and I'm going to double down. And a lot of times that can get you back to even, but all you need is that one time where you just keep double down, and you just keep going deeper and deeper and deeper, and it completely wipes you out. And actually, I saw a video about a guy who did.
You're tuned in to the Investing for Beginners podcast. The show for the long-term investor. We cut through the noise to focus on what works. Compounding, discipline, and the conviction to buy wonderful businesses and stick with them. Your path to financial freedom starts now.
Before we jump into today's episode, I want to address something you're probably going to notice today. Dave isn't on the mic. I want to share with you all that Dave is stepping away from the Investing for Beginners podcast and Sather Research. As this business and podcast have grown over the years, we've eventually reached a point where our visions for the future of the show started to diverge. Ultimately, we struggle with communication behind the scenes and realized we were just moving in different directions. We offered Dave the floor today to do a farewell episode, but he opted to step away immediately, which we completely respect. I want to take a second to genuinely thank Dave. We built the show together from the ground up. He has been a huge part of helping thousands of you learn the stock market, and we wish him the absolute best in whatever he decides to tackle next. But for all of you listening, I want to assure you, Investing for Beginners isn't going anywhere. The mission is exactly the same as it was on day one, to help you compound your wealth and understand the market without all the Wall Street jargon. We have some incredible episodes lined up. Stephen has been working hard behind the scenes with Value Spotlight. He continues to work hard behind the scenes, and now he's stepping up to the mic. We are excited for this next chapter. So with all that being said, let's dive into today's topic.
Yay. Do I say something now or?
So before we dive into today's topic, I want to introduce you guys to Stephen Morris. Stephen, like I said, has been working behind the scenes for us. He is incredibly gifted. He is incredibly smart. He works really, really hard, and he really cares. And that's something that's really hard to find these days. And he brings a fresh insight and take into the stock market. We wanted to start this episode right off the bat just talking about swing trading, because he has some experience with that, and he's been converted to the right way to invest. But we thought we would cover some swing trading and just take it as educational episode. So Stephen, with that long introduction, thank you for joining us. Thank you for stepping up to the plate with this. And I'm excited for today's show.
Yeah, absolutely. Not just today's show. I'm excited that one, to be trusted, to you and Dave. How blessed am I to just have the two of you as mentors over the past couple of years, guiding me into all this. And when you approached me to consult a little bit for you in the very, very beginning, I don't even remember how long ago it was. I was swing trading, and I was listening to you guys talk, and I was like, you guys aren't going to make money that way. And as I listened to you guys talk, it became more and more obvious, like watching you guys invest, and you're all relaxed and chill about it, just doing your research, and watching me invest. And I'm almost sweating on a daily basis, like rushing to my computer because I got a notification that a stock is going down or up or whatever. So, no, totally. It's an honor to be here, and I can't wait. I do kind of wish you hadn't set the bar so high. Like, I'm not that smart. But one thing you did say that was true is I do care. I care massively for our audience, and so I hope that shines through. So, let me know.
I think it will be obvious very soon. So I want to dive into how did you find swing trading? What was it that was attractive to you, and how did that whole journey start?
So I didn't initially find swing trading. I found day trading.
Okay.
And that's how I started. So I retired from the Army, and, I was in the Army my whole adult life. So whenever I went to the civilian world, I didn't know what to do with my next chapter. And so I just did what everybody does and got a corporate job, and it sucked. Um, I was not happy, man. And so I was like, man, there's got to be something better where I can make money. And I just started looking on YouTube for other ways to make money. And I found this guy, and I cannot remember his name to save my life, but he just taught people how to day trade. And he was very upfront and honest about it. Like, it is very hard to day trade. You got to be a very specific mind to day trade. It's, not for everyone. And I'm like, well, I'm good at pattern recognition and all that stuff, so I'll give it a try. And man, you talk about stressful, dude. Like that was brutally stressful. Um, and literally, you're 8 hours a day. You're sitting well more than 8 hours because you got to get all your screeners set up and read the news real quick, see what if you can identify anything that's going to pop. And so, I mean, you're 10, 11 hours a day, you're sitting in front of a computer screen and you can't, you're not moving.
Mm.
Um, and that was not fun. I gave it a go. I want to say for probably 9 months. And
Wow.
that's when I was talking to a friend of mine who was a very active swing trader. And he was like, yeah, I can't day trade, but I swing trade. I'm like, the heck is swing trading? And so he was like, "Oh, it's a mix between long term investing and day trading. It's like kind of in between." And that's total BS. And you know the guy, Brian. I think I've introduced you to Brian Montez. Shout out to him. But yeah, he introduced me to swing trading, and so from there I just started to learn from him and YouTube and took a couple courses, and yeah, that's how I got into it.
Okay. So now I'm interested. Swing trading is sounds like long-term investing. In what way does it share similarities with long-term investing?
So swing trading is, you buy a good example. Ford took a big hit. I want to say in 2023, Ford was struggling, and they got down to like $10 a share, maybe even lower, for a while. And so I jumped in on Ford, and I brought, I don't know, a couple $100 worth of shares, and I just sat there for probably 3 or 4 months before it finally went back up and I was able to exit out of Ford. Um, so a day trader, it is the ultimate bad juju if you have a PL open at the end of the day. You never have an open position at the end of the day as a day trader. At least the day traders I know. Um, and swing trading, that it doesn't matter. If you buy in and it doesn't quite go up as fast as you expected it to, that's fine. You just sit on it. It's going to go back up eventually. And as soon as it does, you hop out. So it's similar, I guess, to long-term investing in the regards like you're looking for the same thing pretty much. You're just expecting it to happen on a much shorter time frame, and you're going to get much smaller returns for the most part until you find that home run grand slam, Hail Mary touchdown, whatever your sports analogy you want to apply.
So you are like digging for deals, like always looking for a stock that's beaten up, or is that not accurate?
No, so it's one of the things you absolutely hate and is trying to time the market,
Okay. Okay.
just
So
like
you're
day
looking
trading.
for a signal. You're looking for a
Yeah,
certain
you
signal that
look at
tells you.
signals. Yep.
Okay. When you say wanting to take profits faster, is there, I come from the Buffett and Munger school of we try to hold things for 10 years or longer. I probably personally lean closer to like 5 years. So I'm somewhere in that 5 to 10 year range of if I find a stock, this is something that I am hoping will happen. For swing trading, it's obviously going to be a lot shorter, but how short do a lot of swing traders tend to do it?
The goal is no longer than 3 days. For
Oh wow.
most, I think 3 days
Okay.
is usually the turnaround you're looking for. Some can be a week, but for the most part, it's you want that pretty quick. And there are a ton of trades I've done same day.
Okay.
Um, I entered in the morning, uh, based, whatever signal, and then got a decent return by the afternoon. So I just exited, because you never know what's going to happen as soon as that bell goes off the next morning. So,
And how many of those just kept going up and you just kicked yourself for
oh,
it?
bro, that happens all the freaking time.
Yeah.
And so that was one of the biggest emotional problems I had,
Hmm.
with day trading and swing trading is it was so hard for me to regulate whenever I saw something starting to trend down. It was so easy for me to ignore the signal that it's going to continue to trend down. Like, nah, it's
Mm.
going to turn around. It's going to, I've already
Yeah.
lost $100. It's going to turn around. And then it's
Yeah.
like, all right, I've lost 200, but it's going to turn around. And that's such a huge trap because that's what turns the stock market into a casino.
Right. Yeah.
And that was one of my biggest downfalls was day trading and swing trading was my emotions were just, and you know me, I'm not that emotional of a guy, but apparently when it comes
Right.
to my money, like super emotional. So,
I think you're in good company there.
right?
Have you heard of the term gambler's fallacy?
No, I haven't.
Okay. It's similar kind of idea, but basically one of the things that can ruin gamblers is that same mentality where, okay, I'm down, but my luck's going to turn around, so I'm just going to double down, and then I'm going to double down, and I'm going to double down. And a lot of times that can get you back to even, but all you need is that one time where you just keep double down, and you just keep going deeper and deeper and deeper, and it completely wipes you out. And actually, I saw a video about a guy who did that back in the 90s or something. He ended up finding a loophole, and I can't remember which bank he worked for, but he found a way to like cover his losses, and he like spiraled, and he ended up losing the company like, I don't know if it was like 10 million or 100 million, like some crazy number. And it was because of this gambler's fallacy where he was like, I'm just going to keep doubling down. And then it just completely blew up.
Well, and it's like I imagine. Well, I know for me, it's that well, you're an athlete, and to those listeners out there that are athletes, like whenever something gets in your head, whether it's a free throw, you're trying to catch a pass, whatever, if that defender's got in your head, like,
Right.
oh man, or if you're down and you only got, a minute and a half to get that score so you win, like you're trying so freaking hard that you end
Yeah.
up just shooting yourself in the foot because you trying so hard forces you into an error,
Mm,
making a
mm-hmm.
mistake. And,
Mm-hmm.
and we've seen that in professional sports, college sports, the professional world, like you were saying, gambling. I'm sure it happens all the time in the stock market as well. And for me, trading, like definitely 100% that happened where I get so frustrated that it just caused me into unforced errors. Like, and then instead of losing $200, instead I lost 1,000. Gee, thanks.
Mm-hmm.
That's
Right.
a great place. And so, yeah, that's I've never heard of that, but that makes a ton of sense.
So, what is it about the way you invest now that helps mitigate that problem?
It's less, you know, it's more scientific, I would say. Because you could have the greatest signals, the strongest candlesticks, like it doesn't matter, like it could and all the experts look at it and be like, oh yeah, that's going to explode, and then it just trends down and you lose a ton of money. And no one really knows why, at least that I know of. No one really knows why. Um, with the way we invest, it's the exact opposite almost. Like we can look at a company and we've done so much research into it. We know the leadership. We know the market they're operating in the space and the competitors and their moat. That's one of the most fascinating things I've learned from you and Dave is a moat. And that's so strategic and powerful, especially which one was it? Casey's. It was Casey's when we were talking about Casey's one day. You were talking about how strong their moat was compared to 7-Eleven and what was the other one? 7-Eleven and
Circle
oh
K. Two,
no, one Circle K. It's one I've never been to, I think. It's big in the Northeast. Wawa.
oh, okay.
Um, you were comparing it to those two, and it just didn't make sense to me. So like you and Dave, I don't know how long you guys took, probably an hour to sit me down and like explain to me like the strategery in their moat. And like this wasn't an accident. It was intentionally done that way because they saw a rift in the market. I guess I don't know if that's the right word, but they saw a gap in the market where they could expose and get a foothold. And man, you talk about really like hammering it down. And then, you know, I go to my dad's house, who he lives about an hour away from me in a real small town, and they have a Casey's. And like that is the best freaking pizza, man. It is so good.
I still haven't had one yet. All
Really?
this talk of Casey's, yeah.
Yeah. So I think that's the biggest difference, at least for me, is it's all scientific. There's of course there's risk, of course there's some guesswork, there's some predictions to it, but it's not just straight up, I think this is going to happen. We actually have proof that it's more than likely going to happen.
Mhm.
Um, so I like it because it's less stressful. My wife likes it because it's more stable and our money isn't just up in the air like it used to be. And it just creates a much more stable environment for the family as a whole, knowing that we have these investments here, this money just sitting here, but it's actually working for us. But if we need it, it's there. We don't want
Mhm.
to grab it, but if we have to, we can. So yeah, it's such a good security blanket outside of the emergency fund and all that stuff. So yeah, did I answer your question? I don't even remember what your
Yeah.
question was now.
That is the greatest sales pitch for long term investing I think I've ever heard.
Awesome.
Okay, do you remember any other things about swing trading? And we can move past swing trading if we've beat that horse. But are there other parts of swing trading that you found to not work for you that long term investing was a better fit for?
I would actually say it's the opposite. Um, because I still do swing trade today. And sometimes if I'm bored and don't have a whole lot of work to do, which is rare nowadays, but I'll even do some day trading. Um, but for me, it's more of a dopamine hit.
Mm,
Um, it's and this probably sounds so stupid. I hope some of you listeners can at least relate to this. I just have an itch to sell something. I just want to freaking sell something. I'm looking at my portfolio and it's like, okay, I got that. That's doing great. Whatever. Yeah, it's not doing so good. I could sell that. And it's like, no, I can't sell that. Um, Costco, like I could sell Costco. Costco's been ticking me off lately. Um, but then it's like reason sets in. It's like, no, don't sell Costco. But but yeah, a lot of times it's just an itch. I want to trade.
mm,
So I have, I talked to my wife about it actually, like because my wife and we do weekly budget meetings. Um,
nice.
so like, and we go over like my work calendar, her calendar, the budget, like, just every Saturday we sit down for a couple hours and go over that stuff. And it's literally like a meeting. Like I prepare a slideshow. I'm such a geek, I know.
Nice.
But yeah, it's cool. But anyway, like I sat her down in that meeting. I'm like, look. I was like, I need a little bit of money just because long-term investing is boring. So freaking boring. I want to just play. So we set aside a little bit of a budget for me to get a swing trade or day trade, whatever I want. And if I lose it, I lose it, and it's okay. It's not really meant to make me money. It's just for me to have fun, I guess, is more of a better example. And it's not much. It's like $150, like
Yeah.
that I can fill once a month. And
Yeah.
anything I make, great. Which I haven't. So I mean, it's hard to make a lot of money off $150,
Yeah.
but it still scratches that itch, So
Right.
um, I don't know if anyone can relate to that. If anyone has like a similar journey, or they started out day trading, swing trading, and then got into like I did. But I know I have talked to like some of our members of Value Spotlight, and one in particular who's been on the podcast several times, Tyler. He totally can relate with me because he and I are kind of a similar personality. So I know I'm not alone. At least there's one other like me out there that just sometimes wants to go sell.
That's
I feel
funny.
like that's so stupid.
No, I mean, I get the like the itch idea. Like my version of that, which sounds, I don't know, like as if what we do is not value investing enough. I play this digital card trading game, and like I just love buying low and selling high. Like I could just do that all day long, Like I sold it for 97 cents. I waited for the price to spike, and I bought it for 97 cents. I sold it for $6.25. Like that just gets me going, like pure value investing. So I have to scratch that itch because I also, like you, I enjoy the fact of these companies working for us and like compounding capital, like a Casey's or a Costco. They're going to do all the hard work to continue compounding our money, and we just have to let them do it once we make the right choices. So I get the itch not to sell, but to practice my superiority in discerning value, and I have to go do it in digital card trading. So no, I get you. And I fought that for a long time, and I think it's good to have that outlet.
Yeah, definitely. And I think, and vice versa, I have massive respect because it is not easy what you do. And as I've learned and grown and kind of ventured out, and I'm gonna brag a little bit. I don't remember if it was you or Dave, but I was talking about, it wasn't knock, it was GD, General Dynamics. And I
Okay.
had done all this research for General Dynamics, and one of you, I don't remember which one, was like, I think now's not a great time for the defense sector, and gave me all these reasons why. I'm like, nope. And I pulled the trigger on GD, and I actually ended up making like a decent profit off GD, and
Yo.
and it's still going. And I'm like, yes. And I'm so stoked. Like I beat Dave and Andrew.
Well, let's talk about that for a second, because one of the things we've said for a long time is you want to buy things where you have a circle of competence.
Mhm.
So, did you feel like you had a special knowledge that helped you with that research?
Oh yeah. I know tons of contractors in GD. I actually know a lot of the leadership in GD, not like the CEO level, but like the management level of GD. Just from being in the military for so many years. I know a lot of their sub companies. But what sold me on what they were working on is they were working real heavy in a lot of drone technology. They're also working really heavily on guided munition. And let me tell you how crazy it is. Like a guided missile or guided bomb, that is much easier science than a guided munition. Like it's like taking a bullet and making it go pre-programmed where you want it to go. And
Mm.
that's literally the level that General Dynamics and some of their competitors knock Northrop Grumman. Northrop Grumman, and some of those others. That's really literally the level they're getting to now, is to where just the munition itself is guided, and that's so insane.
Mm.
But they're working on a bunch of that. They're working on overhead displays for combat soldiers. And one of the coolest things I saw them prototype was you could literally watch um, like your team member, because it knows exactly where your team member is. So they could be behind a wall, but you can still kind of see them
Hmm.
because like their computer's talking to your computer. So you're seeing their silhouette behind the wall.
So no
Even
friendly fire.
right, exactly. And that's such a huge concern, especially whenever you're in in an urban environment where you're going building to building looking for bad guys or whatever, for fratricide or friendly fire, blue on blue, whatever you want to call it. That's such a huge danger.
Mm.
And we train on that daily, almost to avoid it, but it's still going to happen, unfortunately. And that is a solid way to prevent stuff like that. So, yeah, I definitely felt more confident in looking at what GD was doing, because again, I recognize their tech, I recognize their plan, just because I've been exposed to it so for so much of my life, than I would have been if I had looked at you know ExxonMobil or something
Right.
like that.
Yep.
So yeah, 100%. But that's like the feather in my cap right now, is that uh, I was told, I don't know, I'd be careful, and it's like nailed it, bro, nailed it. Get at me, bro.
Quit while you're ahead, right?
Right?
Anything else you think that you've learned in the past couple years about long-term investing? The moat, I think, is such a eye opener for so many people. Are there any other big lessons that you can relate with that had a big impact to you personally?
Yeah. Do you want a cool story, or do you want like actual legit, like helpful?
Let's do the cool story.
The cool story, you guys actually talked about it a couple episodes ago.
Okay.
Because I was the one was asking Dave about different types of shares.
Oh, right.
And
Yeah.
the cool story about it is I remember sitting on the floor watching Bill Clinton do a, what's it called? No, shoot, State of the Union. And he
Okay.
was talking about the stock market. And I remember asking my dad what the stock market was. And I don't know how old I was. I was super young. Um, and my dad explained roughly what the stock market was. And I remember asking him, so if I want to own like whatever toy company, I don't remember exactly what toy company it was, but I was like, if I want to own that company, I just have to buy it on the stock market, and then I can be the boss. And he was like, well, I don't think it works, because he didn't really know either. So
Right.
um, I've wondered ever since then, what stops people from
Hmm.
just aggressively buying a stock and becoming the CEO or the president of the
Hmm.
board. And
Wow.
so, and as soon as Dave and I started talking about it, I instantly flash back and remember that conversation I had with my dad.
Yeah.
And I actually called him as soon as Dave and I got done with our meeting. And I was like, do you remember this? And he was like, vaguely. I was like, here's the answer. So, like 30
Nice.
years later, I have an answer. But it was so awesome to finally understand that. And that's like the coolest thing for me. It did blow my mind. I was like, man, like, and then what Warren Buffett did. Warren Buffett's such a freaking genius, man. Like, he
Mhm.
definitely set the bar in so many places. But, um, I mean, a $700,000 stock is, it's just mind blowing to me.
Yeah. Yeah.
But yeah, so I would say that's probably the coolest thing I've learned from you guys. Um, I would say the most beneficial thing I've learned is patience. It's
Mm.
okay. I would say more than patience is just the word. It's okay. Like
Mm.
you'll be fine. Because I remember right when I first started investing with our portfolio. I don't remember what stock it was, but I bought it and it like instantly went down like $30 or something. It went down hard. And I text Dave and I'm like, what the hell?
Was this Markel?
I think it was Markel, actually.
I think I remember this actually.
I think it was Markel. And I was like, I was freaking out. And Dave, he's just like, calm down. It's going to be okay. Yeah. It'll come back. It always does. It's Markel. They're not going anywhere, I promise. And so it's like just learning, like, it's okay. Like, we've done our due diligence. Mm-hmm. We know, you know what you're doing. Dave knew what he was doing. Like, we were doing the right work. And at the end of the day, it's going to be okay. If we have to sell, we have to sell. But it's not going to bankrupt us. Bankrupt me, more importantly. And so, right? Because,
yeah.
But yeah, that's the most hopeful thing I've learned from you guys is just patience, and it'll be okay.
Oh, that's dope. I feel like that's the perfect way to wrap up.
In closing, guys, audience, ladies and gentlemen, I just want to say thank you for allowing me this chance. I do not take this opportunity lightly. I know a lot of you have been with Dave and Andrew since you were in college, so and now you have families and careers, and that's not something I take lightly at all. And I promise, I know you haven't known me up until this point, but I've known you. And paying attention to the podcast and doing the edits and doing all that stuff on the back end. And so I just want y'all to know that I respect the position I've been asked to come into, and I will do it the absolute best I can. So yeah, with that being said, guys, we're going to sign us off. Make sure you go invest with a margin of safety. Emphasis on the safety. And until next time, we'll see y'all later. Goodbye.
Peace.
You've been listening to the Investing for Beginners podcast. All show notes can be found on our website at einvestingforbeginners.com. To master the basics of stocks in 7 days, sign up for our free email series at einvestingforbeginners.com/newsletter. Until next time, have a wonderful day. The information contained is for general information and educational purposes only. It is not intended as a substitute for legal, commercial, and/or financial advice from a licensed professional. The hosts may own positions in the securities discussed. Review our full disclaimer at einvestingforbeginners.com.